Hello, everybody.
Hey there, rock stars. How are we all today? You missed Mick and I arguing about whether the heater should be on or off. The very typical male-female argument, I think. So we're in at the office today because of those technical difficulties we had the other week. And have to say, I reckon it would be like 0 degrees in here. No, not in my office now because I've got the heater on, but I mean like out there.
Yeah.
Thank you.
Have a guess who won the debate about the heater? Yeah.
I can't work under these conditions.
Karen always wins.
Let us know if you can hear us okay. Otherwise, that whole thing would have looked really weird. So, yeah, jump into the chat box now if you wouldn't mind and let us know if you can hear us, if you can see us. Oh, thank you very much, Damien. Reminds me to turn off the slide. You can never not come to one of these webinars, Damien, because I will just leave the sign on the whole time as the slide up. All right. So, okay, Callie can hear. Damien and Alison can hear us. That's great. There's see some people jumping on. Hey, Chris. Chris and I were just texting a few minutes ago, so I knew a new text was going to be on. I knew
Best I call Chris too.
Oh, do you owe Chris a phone call?
Yes.
Chris, you know you can always come to me if you need to. We've got good to see quite a few people on the call jumping on now. Hey, Dean. Hey, Kay. Callie. Hey, Lynn. Tim. Oh, lots of people jumping on. Great to see you all. So there you go. Chris would appreciate that.
Yeah, he said, please call me, you lazy bugger.
He didn't actually write that at all. He wrote, thanks, Mike. All right. So I've got a few more people jumping on. Great to see quite a few new faces. Well, actually not new faces, new names this week. So that's fantastic. So, you know, I guess for anybody who's joining us for the first time, welcome. Purpose of the hub is we want to be able to do our bit for business owners during this COVID crisis. I think, you know, we've made the joke a number of times that, you know, there's other crises on where everybody's rushing in and being heroes and being able to do awesome stuff, and us pen pushers can't do anything. Whereas when it's come to this particular crisis, we felt quite valued because we can actually lead business owners through this time. So this is something, having this hub to be able to access us, to be able to get some ideas on what to do with your business through this time, is an initiative that we came up with. I did have one person ask during the week whether or not they could share the hub details with one of their friends who isn't a Hendrick Group client. So let me say this unequivocally. Do not keep us a secret. We want to help as many business owners as we possibly can. That is our mission right now. So if there's anybody you feel that who's a business owner and needs something like this right now, we are happy for them to be part of the hub. We're not at all being exclusive about this. This is something we want to be able to share with everybody. All right, so I think we should maybe jump into today's topic. What have we got today,
Well,
Nick?
Let's get into it, shall we, Karen? Last week we focused on cash flow. Admittedly, not the sexiest of topics, potentially the most critical for a lot of business owners right now. We are major advocates for having a cash flow plan in any circumstances, but right now is absolutely critical. Even though we're seeing the light at the end of the tunnel in regards to isolation and potentially COVID, we've got to be careful. So long as we don't experience a second wave, and the impact on the economy and on businesses general is going to be extensive. So we do need to make sure that we have a cash flow plan to ensure that you're back on track as quickly as possible. So if you did miss last week's webinar, I suggest you jump onto the members site, download it, and any past webinars for that matter, just to have a look about the advice and some tips and traps we're doing for small business owners. But for this week, we're going to focus on one particular area of cash flow, and it's an accountant's favourite in general terms: cost cutting or cost savings.
It's funny, you say cost cutting, I say cost saving.
Well,
yeah, it's a different way of the same thing, but yeah.
The reason we've chosen that topic today is because it's related to cash flow, and it's an easy way to get cash back in your business. Because we're finding, and we've done the same thing, and I'll run through some of that shortly, it's an easy way to increase your profit, or obviously increase your cash flow and reduce your overheads, cost cutting. And again, it's something you should be looking at regularly anyway. But with the day-to-day whirlwind that business owners go through and have to deal with, it's easily overlooked. But when there's a crisis or times like these, it can be very motivating to do things that you've been putting off, like looking at some of those pesky contracts, for example, which we might touch on. So what we've done is identify some key areas that we want to run through today that we think you could look at in terms of cost cutting, where business owners could potentially save a lot of money and improve their cash flow.
Even a little bit of money. I think, even some little savings at the moment, they're going to make a difference for people.
So we want to share those with you. And also, as Karen said, we want to share this hub to the greater business community. So, if there's anyone you think could find value in the webinars, let them know about it, because the more we share, the better.
Yeah, this is, that's, I guess, a good way of putting it, Mick, is being able to build a community where it's not just, doesn't have to be just us. It can be other members of the business community who are sharing ideas, sharing thoughts, sharing challenges. Can I do that dollar thing? You know what I'm talking about? Yeah. All right. So hang on a minute, everybody. Watch this. It's this is a visual.
This is a visual.
Okay, Mick, you play with me.
Sure.
All right, Mick. So if
plan going on.
Yes, it is. It's very enlightening. So if I have $1 and you have $1 and we each exchange dollars, what do we both have each?
Well, I'm an accountant. 1 and 1 makes 3 generally. So we have 2 though.
No, we don't.
We have $1 each.
Oh my gosh, he's ruining it. So if I have $1, you have $1, we exchange dollars.
We only have $1.
We only have $1 each still, right?
Yeah.
But if I have an idea and you have an idea and we exchange ideas, what do we both have?
2 ideas, Karen.
We have 2 ideas each, right? So kind of in a roundabout way, they're trying to explain the compounding effect of the community for ideas.
That didn't work, did it, with my accounting?
Oh, it really didn't. You shouldn't.
1 and 1 make 3. What do you want it to be was also what I was going to say.
I keep trying to tell Mick he's the straight man in the in this comedy duo. So anyway,
I go off script.
You go rogue, right? But look, it would be great today too if during the course of the session, please don't hesitate to jump in the chat box. If you think of, we've just grabbed a few that we thought of, because obviously we've only got 45 minutes with you. But we grabbed a few, and we'd love to hear though if you guys have got some others that we maybe haven't thought of, or that we didn't present today, or it might be something specific that you want to share. That would be fantastic.
If you've got an idea and I've got an idea, there's 2 ideas.
And everybody on the call's got an idea. There's like 50 ideas.
Good. All right, so let's kick this cost-saving webinar off with reviewing your suppliers. They're always a good place to start because generally they're most costly in your business. To review your current service or product suppliers. Perhaps take a look at what you're currently paying and compare it to the market's average. It might mean making a few calls to their competitors, but this could potentially save you a lot of money. We hear that a lot. But we want to stress here that we're not saying just go out and simply change suppliers based on price, because I think that can be a fatal mistake sometimes. I think we all know it can be costly to make a decision based on price, because price isn't everything. Instead, you need to be sure you're comparing apples with apples, or dollar for dollar. I'm still trying to fix that up.
No, don't.
So,
you've gone.
So do your research carefully. It might even just be a conversation you want to have with your current suppliers as well, to see if there's a better deal available. It's off suppliers, of course, but you get regular letters about electricity comparing, and even, you could be on a better deal type thing. So,
I disagree. I think that's still a supplier.
Mm-hmm.
I think your utilities are suppliers, and your finance are suppliers.
Yeah.
I think you can extend that out for sure.
So have a chat to your current suppliers, because quite often, as we know, They may not be offering existing customers deals, or you may not even be aware of. And even probably more to the point, there are often more cost-effective ways of dealing with your existing supplier. Perhaps they may not have looked at your records lately to see how much you're actually spending with them, or whether there's something you can do in your ordering process and what they can offer you in terms of the volume that you are buying.
Yeah, or there might even be a different way that they're doing things, or a different product or something like that that may be less expensive but may suit you better.
Yeah. I have an example. I meet with one of our larger clients every quarter, and every quarter we are talking about freight and cartage because we noticed a stark increase, even though turnover was flattening. And with that discussion, their freight and cartage was cut by $20,000 per annum as a result of having a discussion around how they could potentially change the way they ship their goods.
Wow.
Larger volumes, larger quantities in less numbers of volumes. So, and even rates as well. So there was some discussion around rates once they'd made a call to a competitor to see what it was also offering. So there's plenty you can do around suppliers. As I said, we're not saying go and trade them off either, because there's a lot of examples where you might change suppliers for cost, and there's a reason they are cheaper. They may not offer extended credit terms and cash flow king, things like that. So there's plenty of things you can do.
Do your research, I guess, is probably
always
the key there. I'm just thinking, I'm wondering who the client is.
Yeah.
But saving $20,000 just on
freight and cartage.
Yeah. So and look, I think that started me thinking also about another thing that you can consider, and it's probably not something that jumps to people's minds straight away, but you could consider a bit of a co-op concept. So, maybe not something you've done in the past, maybe you never even thought of, but the current crisis might be motivation to do something a little bit resourceful in this space. So I guess what I'm talking about here is getting together with other businesses who purchase the same supplies that you do. Then you guys can all pull together and save some money. And it doesn't just work for freight, shipping, or products. I actually have some clients, more than one client, they share staff. So, there is ways that you can have a little bit of a co-op approach if you just maybe reach out to people who have the same needs that you do. So don't limit yourself on your thinking when it comes to this. And just quickly, yes, Dean, I fed the fish. I did send you a message.
Yeah.
The important things, yeah. I've got to look up, and I put the light on so they can have a little bit of light, a little bit of sunshine.
Back to it.
Yep, let's get back to it.
So that's a good idea, Karen. The co-op is definitely worth exploring, especially if you're a business with regular purchase, stock or equipment.
Or people.
Sharing people. Oh, that didn't sound
good. No, it didn't sound
you could
good.
also consider negotiating a different payment arrangement with suppliers. So perhaps instead of lump sum payments, you might be able to spread your payments over a longer period. It might not necessarily save you money, but it might take the pressure off your cash flow, which is also critical at this time.
Yeah, that's I really like that one because it doesn't save you the money, but it can spread it out. And it is one of those things that often with these arrangements, if you don't ask, people don't think about it. So, you might ask somebody who's never brought it up before, but they might not have thought about it, or they might not have thought that it's something that you want. It's the same too when we talked about suppliers with utilities and banks. Your bank is not going to ring you and say, hey, do you know what? We're offering this great new rate to new lenders at the moment. Would you like it? Right? They just don't our experience, we know that they don't do that, but we do know from experience that if you ring them up and say, hey, is there a better rate that you could do on my loan right now? Often they'll come back with something. So, it's worth doing.
Even pre-COVID, one of our accountants was regularly telling me his lovely interest rates, which are always lower than mine, because he's doing exactly that. He's calling the bank to discuss it. But you did make the point earlier about suppliers, electricity being a supplier. And there's definitely better rates out there for those as well.
Yeah, exactly. So I want to jump in with an interesting one that probably come into vogue a lot more in these circumstances than I've ever seen it in my 20 years of being in business. And it's one that is seriously slashing costs for a lot of business owners. And that is reviewing your business premises. One of the things that's really come to light as a result of the current crisis is how flexible and resourceful, I like that word. I'm not above making my own words up. Shakespeare did it, I'm going to. But we've become really flexible and resourceful because we've had to. And that is often the, what is it? Invention is the, necessity is the mother of invention, right? And so it's amazing how quickly entire businesses were able to shift to remote working, or even if it was partial remote working with shifts of team coming in at different times. And it's not just small businesses, large corporations with thousands of employees were able to do this. And I think, quite often we've kind of thought of having the business premises as even a bit of a status thing, oh, we've got this great premises. Whereas I feel now like maybe that's not going to be quite as important. But making that shift, because people have actually done it and done it really well. And, we know from experience it's not easy. Even with a team of 20, it was a fair amount of work. So, we had to, what did we have to look at? We had to look at equipment, new processes, we had to change our reception, we had to start doing online meetings, we had stuff that usually got printed. We're not collecting paperwork from the office or anything like that. So HR had to be an issue, and just a mindset issue as well. But we were able to get our team working from home within 48 hours. We turned the whole thing around from the just talking with our team about it to having everyone home within 48 hours. Now, I can say this because I'm not an accountant, right? I'm about to make an accounting joke, don't you, right?
I think so.
Because I'm not an accountant.
You can do it better than my accounting joke.
Yeah, maybe. I actually do, well, it's not an accounting joke as such, but I actually do think it's very impressive for an accounting practice to be able to do that, because accountants are typically very left-brained, very resistant to change. But our team did an absolutely amazing job. And actually, Mick, do you want to share the acronym that you gave our team in order to motivate them to change?
Well, yes. Is this the accounting joke? Because it's not really accounting.
No, it's not. This isn't a joke. This is actually...
So, as to motivate the team, and we have a team of 20 to move home, I came up with a lovely acronym which seems to have stuck.
Oh, of course it's stuck. What's the acronym?
FART.
FART. FART is our acronym for working from home.
F-A-R-T.
Yep.
So that stands for flexible, accountable, responsive, and tolerant. Because there was always going to be challenges with the tolerant bit working from home. So, there's a lot to be said about an acronym, especially one that sticks in your mind.
Nobody's forgotten that.
And when it gets mentioned, it does, conjure images of being flexible, not what you're thinking, flexible, accountable, responsive, and tolerant.
Yeah.
And I'm sure other businesses out there do have similar stories about that. Teams working from home, half teams working from home. So even if it's, those sort of stories. So that worked wonderfully.
It did. So, and, if we weren't working out something or somebody had a challenge, Mick's response would be fart people. Hey, it worked. It worked. And of course we had the lovely Catherine giving us pictures of unicorns farting rainbows. I liked that. That was nice. So how does this all factor into cost cutting, right? Well, first of all, if you're already a home-based business, you probably can't take advantage of this cost saving strategy at all, right? But for everyone else, it might be a good time to review whether you really need all the space you currently have for your business. And this is actually something we've seen a lot of happening with a number of our clients. So, clients not renewing their leases or downsizing their space, for example.
There's a comment there about some working from home and maybe lease a beautiful new smaller premises that was cheaper as opposed to larger premises. So because some of the team are working remotely now, that we're used to it. I won't name the name.
Can work remotely. Look, we've got other clients who found that remote working was so successful. They're going to downsize their office, and instead of having everyone have their own offices or lots of offices, they're going to have a few meeting rooms and hot desks as part of it as well. We've had some clients who've moved their production to smaller shed style arrangements and having the sales and support teams working from home, and then they can decide later whether they want to rent something or not, or whether this measure actually did work. So obviously if you're renting, you can save on rent payments. If you own the property, you could consider maybe subleasing. Is it called subleasing, or is it just called lease? But if you own it, are you subleasing or are you leasing?
You're leasing.
Yeah, okay. And maybe it depends if the super fund owns it or you own it. Okay, right. Anyway, you can let somebody else rent the space from you, right?
You're not paying for it, someone else is, because you downsize your size.
Yeah. So, or you could decide to go out and rent a smaller premises, or buy a smaller premises, depending on your cash flow position, and rent out your larger premises. And then, of course, there's the flow-on costs for smaller premises. So, utilities, insurance, those sorts of things. One warning that this comes with is there is still, the study is still showing, Mick and I have been looking at this a little bit ourselves lately, research still shows that most people are less productive working from home, okay? So after a while, productivity will fall off. Not for everybody. There are some people that are really disciplined and really motivated, but over an extended period, it can lose productivity. So you need to keep a handle on that as well. So really, know what you're doing and keep your eye on that. So we've got a couple of things. First of all, here, Damien has written, hot desks have been deemed coronavirus petri dishes, which I think is really funny that it's a petri dish, and that's Damien's surname. Yes, I think, I can imagine that would be the case. You'd probably have to have your dish of soapy water. And I guess too, we're thinking about this being post coronavirus, because I think, most of us, if we're still being asked to work from home if we can until at least July. I mean, it doesn't just have to be coronavirus, does it, Damien? It can be the flu, it can be the common cold, all those sorts of things. Take that into account as well. Also had a quick question about whether there are still spots for the cash flow service that we talked about last week, which was the roadmap through ISO cash flow service. Okay, you only just watched the video today. No, that's no problems at all, Adrian. Look, absolutely. There's no limit on spots. What the limit is on is the time frame. So once we are back out of ISO and we're all working back in the field again, that's when we'll stop. And that's only because of what we said earlier. This is part of our commitment to being able to help people through this. If there's anybody on the call right now that has no idea what we're talking about, I won't go into details now because we've got plenty to talk about, but what I would suggest is jump on last week's video, from in the member side. We had a blockbuster of an offer for people who are either concerned about their cash flow or just want to make things really work for them at the moment. Look, I might even maybe I'll put something about it in Facebook tomorrow, so you don't have to go through the whole video if you don't have time. Yeah, in the hub, that's right, exactly. Okay, so let's get back into the next expenses. Thank you very much. Let's have this one, it's a little bit controversial, but it's actually the biggest expense for most businesses, and we hadn't quite worked out who was going to take this particular one, and
I look forward to this.
No, I have no idea. Let's rock, paper, scissors for it.
Okay.
Right, just because it's not the most pleasant one. You want to rock, paper, scissors? You really will? Okay, cool. Ready?
1, 2, 3.
Oh, ready?
Oh.
3 times. That's 3. Okay. I lost that, didn't
Oh,
I?
no.
All right, I'm dealing with this. Okay, no, that's fine. All right, so for the vast majority of businesses,
well, I did all JobKeeper, so you're just smashing.
I don't mean from doing. I mean because it's not necessarily the most pleasant of cost-saving topics to talk about, right? Because from the vast majority of businesses who employ staff, biggest expense is people, right? And that includes virtual employees, it includes contractors, subcontractors, and outsourcing. You know, I got Mick to work out what our business looked like, just to give you an idea of the sorts of percentages that people can cost.
She got it right too. She got me. She didn't ask me. She got me to do this.
And you did, so thank you very much. So, you know, for a business like ours, for example, wages accounts for just over 49% of our overall expenses. All right, so almost half our expenses is just wages.
Mm-hmm.
But then if we add on, and I didn't ask for this, but of course Mick went that level deeper because he is an accountant, which is great. When we add on costs like super, payroll tax, work cover, all those sorts of things, the costs actually increased to 65%.
In ordinary world, payroll tax, so don't get technical on me.
No,
this year.
Yeah, okay.
Yes, normally it's there.
Yeah, so, you know, 65% of a business like ours spends,
Two-thirds.
Yeah, 2/3 on people. Okay, and so, you know, and that's going to be the case for a lot of people who may not have done those stats yet, but it was easy for me to do, so I got him to do it just to give you a bit of an example. Now,
can I chime in for a second?
Yeah.
So whether it's people or suppliers, which we first talked about, a lot of businesses work on 1/3, 1/3, 1/3. So by that it might mean 2/3 is costs, such as suppliers generally and wages, and the other third is profit or overhead. So whether we're talking about suppliers or wages, generally it's 2/3, whether you sell goods or services, or like us, you're a service-based business. Most costs are around materials and labour account for nearly 2/3. So that's why we're focusing on these two first. But please continue.
It's a good rule of thumb. I like that. So I think probably I want to be really clear here too. We're not suggesting that means you go out and lay everyone off to save yourself some money. However,
you still have to pay JobKeeper anyway.
We do think it's a good time, and I'm just going to be blunt here, to really look at what you're getting for your money, okay? Mick mentioned earlier about that day-to-day whirlwind of business. Now, this is another area where it can work against you as a business owner, because sometimes you do get so caught up in that day-to-day busyness and getting the job done, getting the work out the door, that you don't actually look at whether it's being done the most effectively.
Don't look at how you could work on your business, like put in processes. Look at your team.
Well, no, yeah, I'm more looking at specifically at team here, that it's easy to just think, okay, well, things are happening, but not look and see that the team is as effective and as productive as
working on.
Yeah, that's right. Okay, yeah, good statement. I'd love to know actually. I'd love to know for a second just on that. Anybody on the call who employs at any level, whether you have KPIs for your team, so just pop in the chat box a yes or a no, and
so I'll elaborate on that for Karen. KPI stands for key performance indicators, because normally an accountant uses those terminology like.
Well, if you've got KPIs, you would know what they are.
I got it.
So, no, but I would like to know if you have KPIs for every one of your team members. Just put in yes or no. And when I say team members, again, I'm talking about, so, you know, any clients of mine that are on today, you know, we talk about also having your virtual assistants should have key performance indicators. Your contractors should have key performance indicators. Oh, okay. I've got one smarty pants who's saying that his business coach is pushing for it, but not there yet. Oh, well, we are meeting on Thursday, so that's fine, Christopher. Okay. Anybody else? No. Okay. Well, look, you're not Robinson Crusoe there. And maybe this is something we can do in a little bit more detail at another time if people are interested, given that there aren't many people with that, because this is one of my pieces. So if you don't have those KPIs in place, it's probably not as easy to readily judge the effectiveness of your employees and what they're doing. So what we'd probably recommend is just start simple and critically look at each employee's productivity, right? So just start there. Yeah, output. But I should say too, by productivity, I'm not just talking about billable time there. For those in service-based or anybody that watched, what was that Tom Cruise movie, The Firm? Billable hours, billable hours. Anyway, I'm not just talking about there. What we're talking about really is whether there is a straight line between what they're doing and contribution to the business's revenue. So how are they contributing to the business revenue? And is it good enough given what you are paying, right? So you need to do, it's like a bit of a cost-benefit analysis, isn't it? Like if I put that one in, right? If the line's squiggly or if the line's too long, well, that's not a good thing and it shouldn't be ignored. If there are staff in your business who are consistently underperforming, then it's time to have a conversation. First of all, they may not realise they're underperforming, especially if you haven't got KPIs in place yet, right?
I was going to say that.
So, you know, you've got to have that conversation and let them know what their expectations are, right? If they know their expectations and they're still not performing, then it might be time to free up their future and save yourself some money, right? Well, yeah, but we're talking about cost savings here, right? Okay. So I'm going here for the cost saving. That, you know, that's a hard call and it's always a tough conversation, but you can't shy away from it because it's your business, right? And your business is just that. It's a business. It's a commercial activity. And so unless your employees are volunteering their time, then there is a requirement that they earn what they are paid. That's kind of the contract that they agreed to by, like if you want to really put it down to a nutshell, that's the contract that we enter into with employees. If they achieve a particular result, we'll pay them for it. So I think that's one area to definitely have a look at. You may not need to even, you know, let people go. I think we've mentioned before about, you know, that's the big one, but you can have some cost savings without having to let them go. It might just be
reduce the hours. Currently working to get the job done, or you know, shouldn't be working overtime. That's generally a big one in a business.
Actually, I jump in. That's a really good one. If you are paying overtime for work that could be reasonably expected to be performed within the normal working hours of that person, you need to look at it because something's going wrong there. Either you've underestimated how much can be done in that time frame, or I think it's called Parkinson's law. Maybe I shouldn't have said that. I'm being recorded. Might be found out. No. Parkinson's law. I'm pretty sure that's what it's called. If somebody can Google it for me. It's where the work will expand to fit the time available.
Oh, that one. That's a favourite.
Yeah.
Which can often happen, obviously, especially in these times when things can be a bit slower. I think also with that, it may not also be a person. We talked about efficiencies and processes. It could be that there's some inefficient processes in your business that means that employees are spending too long on certain things for not enough output. So you can really look at your processes to make sure that they, not doing overtime which costs you money and therefore is reducing your overheads, reducing your profit, increasing your overheads. And there also might be some areas of your business where you should consider investing in technology or outsourcing rather than using employees.
Maybe invest. You said, investing in technology, it could be better than investing in people. I like that.
Because technology can sometimes make it more efficient once you change the process as well as reduce the cost.
Excuse me one moment. I need to turn off the heater.
Really?
Yeah.
Wow. And quite frankly, I'll keep going right now because of the current situation. May not simply have the work or the dollars to afford the wages. So technology sometimes is a short-term, what I'll call time pain to implement, to get up and running, but a very long-term efficiency and cost-saving measure. This is a situation many businesses have found themselves in, including large corporations, So you don't feel bad about that. We're doing similar things where, for example, putting in an online appointment booking system, which is a way to obviously free up labour for clients to make their own bookings.
I think, but I think more around too, it's not just the technology, it's actually sometimes you can't afford. There's people right now, even with JobKeeper, they can't necessarily afford to pay the employees first to be able to compensate later with JobKeeper. And so, if that's the case and you do find yourself in that situation, then you may have to make some of those decisions that we talked about last week. So, cutting back hours, asking team members to maybe take some annual leave. Again, look into the HR around this, but there is, for many cases, you can direct team members to take annual leave in a circumstance like this. You may have to stand them down or make them redundant. And that just might be what you need to do to be able to save some money and keep your head above water for a little bit longer.
Taking some leave, I think, is a good one, perhaps short-term and long-term as well, because that can reduce your future liability or your future outgoings when that time comes. So it's part of reducing your costs as well, especially if you don't have work. And also, really importantly, perhaps talk candidly to your team about why you need to do it, reduce hours, and your plan for getting things back to normal as well.
The communication, that's really good,
It's important to communicate so they don't just feel like they've been forgotten or ignored.
Or wondering when is it going to happen. If you can say to them, look, this is what may happen, this is the plan if it does happen, and this is how we're going to try and get things back on track. They're not going to like it. It's not going to be any more than you will like having that conversation. But if you think that there's that possibility, you are better to include them in that conversation, and they'll be a lot more understanding and supportive of any decisions that you do have to make.
Yeah, so even if you haven't gone down this road yet, it's good for them to know it's a possibility, and they're not blindsided if it does happen where you have to reduce those hours. So one of Karen's favourite sayings, which I'll plagiarise right now, is plan for the worst but expect the best. So that's part of making sure you communicate.
There's a client on right now that I used, that we had that discussion today. I do have to say, I didn't make it up. All right, so we've tackled with team and employees, we've tackled the biggest expense for most businesses. So I want to move to what can often be the second biggest expense for a lot of businesses, and that is technology. What we found, and I've found this time and time and time again, that most business owners don't use their technology to its maximum benefit. Yep. And in a lot of cases, they have features that they don't need or realistically are just never going to use. That might have sounded really good when they were being sold this whiz-bang software package or this piece of equipment or hardware or whatever it is. But when you think about it, you think, I'm just never going to actually need to use that, or it's just not worth it in that day-to-day practicality of things. Now, if this sounds like you, it might, something that might be possible in your business, then what I would really strongly recommend is doing a technology audit, right? So look at what you have and what you're paying for versus what you are actually using regularly, all right? And at the very least, if you're not using something to your maximum effectiveness and you don't want to get rid of it, I have my clients who go, oh no, but I'm going to use it one day. Okay, great. In the meantime, you're paying $300 a month for this thing. Set yourself a time frame, right? So time frame, I would say no more than 2 weeks. So if you find something in your tech audit that you go, okay, I don't want to get rid of that, but I'm not using it yet, or I'm not using it properly yet, then at least have a plan for how you're going to implement it and get that started within 2 weeks, all right? Any longer than that, and it's probably not going to happen, and you're back to paying for something you don't need, and right now is not a great time to be paying for things that you don't need. also, just one other thing around technology is I've found quite a lot of is people who've forgotten that they're paying for certain technology.
Yeah, the roll around subscriptions, they just keep being deducted that you've somehow subscribed for, really.
Yes, yeah, or you've forgotten, you've forgotten how much it was, and so when you look at it, you might go, okay, well, is there a way we can pare this back? Do we need that many users? Do we need that many bells and whistles? So
yeah, we did that with our technology. I'm not sure whether this is related, but we did it with our photocopiers here. We halved them, which saved a lot of money.
Yeah,
so, and again, just by a bit of reshuffling of where and how we use those. So, a bit of technology review.
Yeah, well, you know how I feel about paper anyway and the environment. So I think one of the things for me that's coming out of this is going a lot less paper coming through, really being able to find ways to be able to do things without that level of paper and save the environment. But also, if you're not that way inclined, and that's fair enough, I'm not judging. But it's actually more effective, more efficient, faster, more secure, all those sorts of things too. So
$1.10 a stamp. You only have to go by that, I reckon, especially in our business. $1.10 a stamp.
Damien's wondering about the fax machine. Yeah, okay.
Haven't had one forever.
Fantastic. Yeah.
So our final one, cost saving, is close to our heart,
money.
which is called do not donate to the government. So if you've worked through your JobKeeper and we've given you advice and you're not going to get yourself in the hot water.
Yeah, you know that, if you've worked with us in JobKeeper,
you know that we'll go straight down the line.
Absolutely. We're not going to let our clients get caught out in nasties with that.
And we make sure our clients pay the minimum amount of tax possible as long as they don't step over that line.
Yeah.
That's the point about the JobKeeper. Make sure that you're legal, because we're talking about a significant amount of money.
Yeah, but we also want to make sure, our job is to make sure absolutely that you're not paying a cent more tax than you absolutely have to, because that'd kind of be a waste.
Yeah.
Well, it'd be a donation, wouldn't it? A donation to the government.
To the government. And I think many business owners have probably let June 30 come up very faster than it normally does because of every other event and pressure they're under.
Isolation and COVID. It's like June 30, what's that?
How do I get money in the door and work? But you should be talking to your accountant at least about some tax planning strategies, because let's face it, the first 9 months of the year were generally pretty good for everybody. It's just the last 3 months. So it's the sooner the better you can look at maybe some potential tax planning strategies and what you may need to do to implement.
Yeah, you'd want to be doing that within the next few weeks,
wouldn't you? Take some time to implement. There are plenty of tax planning strategies. There's probably too many to list, to be frank. However, I do think people also should consider their need to preserve cash as well. I'd say it a lot, and I've said it a lot on these webinars. Cash is oxygen for a business. So I would caution people about just, engaging in tax planning strategies to save that 30% tax rate up to 50% tax rate almost. But because every business is paying the out-of-pocket costs of that tax benefit. So what that means, if you save 30%, you are still paying the 70%. If you're saving 50%, it still costs you 50%, is the after-tax cost. But again, this is where I'd advocate your cash flow. Maybe consider the cash flow through ISO planning service, because you also don't want to pay too much tax than you otherwise would, because you don't know what you can do to save some tax. A good example of that would be, you don't want to be taking cash flow out of your business to make an investment under the new rules where you can buy something up to $150,000 to save tax, to the vast detriment of your business, because you basically have no cash flow. So
good to talk to your accountant about those sorts of things before you do them.
Do the planning now, as we've got just under 6 weeks to go. I'm aware, obviously, that people's appetite for tax planning as a general rule right now is pretty low, because you're focusing on the long-term survival of their business. But you also need to focus on your long-term wealth creation goals too. And some of this also means you need to still consider superannuation, those tax incentives of investing up to $150,000 in plant and equipment to maximise that cash flow, meaning you get some of it back, 30 to 50% back. Be careful, don't go buying a car above $57,000. That's all you're going to be able to claim. I'll caution you there. Things like deferring income so you don't pay tax now, which will help your cash flow. and prepaying expenses and interest. So it's preserving cash but saving tax, because tax is also a part of preserving your cash and keeping more for you. So you always need to factor in those cash flow requirements if you want to buy something or save tax, especially if you're going to finance a piece of equipment for tax saving, because you have ongoing financial commitments, lease payments, loan payments that you'll need to make, and your cash flow needs to be able to support that.
Very good point, Anne. I think we've gone 1 minute over, but that's pretty much it. We'll hope that they gave you a bit of food for thought. We haven't had, I thought we might have a bit of an extra time today, but we haven't. So I might start like a little bit of a Facebook thread over the next 24 hours to see whether anybody else has any other cost saving strategies that they want to throw out there that we can get into the community, because I think this is, it's a really good time to look at those sorts of things. Just before we do jump off, I just want to make one really important point here, and that is that I did choose to wear a blue shirt today before Mick put his on, so it is not my fault. We are both matchy-matchy today. Hope you've got some information out of this. Hope you've had a bit of fun as well for the last 45 minutes. Please jump on the Facebook page if there's anything else that we can help you with. And I will go for put some stuff about the ISO cash flow service on there as well. So yeah, I'll spend a bit of time in Facebook tomorrow and get people up to date. So yeah, great. Yeah. All right, and yes, you're right, Damien, the clock's still not working. That's because time is just a concept, Damien. Don't stop me. All right, take care, everybody. Have a wonderful time, wonderful evening, and we'll see you next week. Bye.